All right, everyone, get ready to dive into the pulse of what's happening right now. The news cycle is spinning faster than ever, and if you're not plugged in, you're missing out. Today, we've got a rapid-fire rundown of the stories that are shaping our world, from market-moving announcements to game-changing tech. We're talking about the signals that could redefine your investments, the data that's keeping everyone on the edge of their seats, and the innovative breakthroughs that are pushing boundaries. This isn't just news, this is your essential update, delivered with the energy you need to stay ahead. We'll be breaking down the latest market movements, exploring the reactions to crucial economic indicators, and uncovering the strategies behind major corporate plays. Plus, we're looking at the companies making waves with incredible performance and forward-thinking technology. You don't want to miss a second of this. So buckle up, hit that like button, and get ready to subscribe and ring that notification bell so you never miss an update. Let's go. We're kicking things off with a deep dive into the markets, where major indexes are seeing significant upticks. We'll explore the data that's fueling this rally and keeping key economic expectations in check. Get ready for insights into how this impacts your investments as we analyze the moves of major players and the indicators that matter most. Next up, we're zeroing in on a tech giant that's making headlines with its financial performance. Despite impressive earnings and a strong showing in the high-demand AI sector, there's a surprising twist to its story that has the market buzzing. We'll unpack the details behind this fascinating corporate narrative. Finally, we're looking at another powerhouse company that's not just meeting, but exceeding expectations. Their latest financial report reveals record-breaking revenue, driven by cutting-edge technology and strategic acquisitions. We'll break down the numbers and what this means for the future. And that's just a taste of what's in store. Make sure you're subscribed, hit that notification bell, and join the conversation in the comments. Let's get informed. Market momentum. Stocks rally as jobs data approaches. The stock market experienced a significant surge, with major indexes closing higher as investors digested crucial labor market data and anticipated the upcoming jobs report. This rally saw the S&P 500 achieve a new record close, underscoring a period of positive market sentiment. Futures for the Dow Jones, S&P 500, and Nasdaq all pointed towards continued gains in after-hours trading, indicating sustained investor confidence. The market's upward trajectory was supported by several key factors. Data released earlier in the day revealed an unexpected increase in weekly unemployment benefit claims and a slowdown in private sector hiring during August. While this suggests a cooling labor market, it did not derail expectations for a potential interest rate cut by the Federal Reserve this month. In fact, investors are largely pricing in a 95% probability of a 25 basis point cut, a move seen as increasingly likely following recent dovish comments from Fed Chair Jerome Powell and previous weak payroll figures. This expectation of lower interest rates typically makes equities more attractive to investors. Several prominent companies played a role in the day's market performance. Chipmaker Broadcom, a key player in the artificial intelligence space, saw its shares climb ahead of its quarterly earnings announcement. Retail giants Amazon.com and Meta Platforms also contributed to the broader market gains. However, Salesforce experienced a notable dip after issuing revenue forecasts for the third quarter that fell short of Wall Street's expectations, highlighting potential challenges in monetizing its AI platform. Meanwhile, American Eagle Outfitters shares surged following an optimistic forecast for comparable sales in the third quarter. Analysts noted that while September historically presents challenges for the stock market, with the S&P 500 experiencing average losses since 2000, the current rally suggests underlying strength. The market's ability to absorb mixed economic signals and continue its ascent points to robust investor appetite, particularly for companies demonstrating strong growth potential, especially within the AI sector. The anticipation surrounding the official U.S. monthly jobs report remains high, as it is expected to provide further clarity on the labor market's trajectory and the Federal Reserve's future monetary policy decisions. Public reaction has been overwhelmingly positive, with many investors expressing optimism about the market's resilience and the potential for further gains. Analysts are closely watching the interplay between economic data, corporate earnings, and Federal Reserve policy to gauge the sustainability of the current rally. The performance of key tech stocks and their ability to drive broader market movements remains a central focus for stakeholders. But what happens when even record-breaking performance meets a surprising market reaction? Stay tuned as we dive into the fascinating story behind a major tech player's recent stock movements. Market resilience: indexes climb as rate cut hopes persist. Major U.S. stock indexes concluded Thursday on a strong upward trajectory, buoyed by labor market data that reinforced expectations of an interest rate cut from the Federal Reserve this month. Investors are closely monitoring these economic indicators as they await the comprehensive U.S. monthly jobs report scheduled for release on Friday, which is anticipated to offer further insights into the economy's health. The performance of key sectors and companies significantly influenced the market's advance. Broadcom, a prominent semiconductor company recognized for its significant role in artificial intelligence development, experienced a rise in its stock value leading up to its quarterly financial results. Similarly, shares of e-commerce giant Amazon.com and social media behemoth Meta platforms contributed to the day's positive market sentiment. These gains reflect investor confidence in companies poised to benefit from technological advancements and consumer spending. Economic data released during the day provided a mixed but ultimately favorable picture for those anticipating monetary easing. The number of Americans filing initial claims for unemployment benefits exceeded forecasts, indicating a potential softening in the labor market. Furthermore, data revealed a slowdown in hiring by private employers in August. These signs of a cooling labor market are seen as supportive of the Federal Reserve's potential decision to lower interest rates, a move that typically stimulates economic activity and boosts stock valuations. Analysts suggest that the upcoming jobs report is unlikely to drastically alter the Federal Reserve's stance, given recent communications from Fed Chair Jerome Powell. The labor market data we're going to get, payrolls, tomorrow, I don't see really changing anything significantly because Fed Chair Jerome Powell has effectively already told us we're getting a cut unless it's really, really out of bounds, commented Mike Dixon, head of research and quantitative strategies at Horizon Investments. This sentiment is echoed by market participants, with CME's FedWatch tool indicating a 95% probability of a 25 basis point rate cut. This widespread expectation has been building since the July payroll figures and Powell's dovish remarks. Despite the overall positive market trend, some companies faced headwinds. Salesforce shares declined after the company projected third-quarter revenue below analyst expectations, signaling potential challenges in monetizing its artificial intelligence offerings. On a brighter note, American Eagle Outfitters saw its stock price jump after forecasting third-quarter comparable sales that surpassed estimates. Historically, September has been a weaker month for stocks, but the current market performance suggests resilience. The S&P 500, Nasdaq Composite, and Dow Jones Industrial Average all posted solid gains for the day, reflecting broad-based strength across the market. Investor sentiment remains cautiously optimistic, with a keen focus on the upcoming jobs report and its potential implications for Fed policy. The market's ability to maintain its upward momentum despite mixed economic signals highlights its underlying strength and the significant influence of anticipated interest rate adjustments. The performance of technology and retail sectors continues to be a key driver of market activity. Now, let's shift gears and look at a company that's making waves, but perhaps not in the way you'd expect. Get ready to uncover the story behind a surprising stock performance despite strong financial results. Broadcom's earnings puzzle, record results stock dip. In a move that has analysts and investors scratching their heads, semiconductor giant Broadcom, AVGO, experienced a stock decline despite reporting record-breaking third-quarter earnings and showcasing robust momentum in the booming artificial intelligence sector. This contrarian performance raises questions about market expectations and the factors influencing stock valuations, even in the face of outstanding financial results. The company's fiscal third-quarter performance was undeniably strong. Broadcom announced revenue figures that soared to $15.95 billion, marking a significant 22% increase year-over-year and setting a new quarterly record. This figure also surpassed the consensus estimate of $15.83 billion, demonstrating the company's ability to meet and exceed market expectations on the top line. On the profitability front, adjusted earnings per share reached $1.69, a substantial 36.3% jump from the same period last year, and comfortably beat the analyst consensus of $1.66 per share. These are the kind of numbers that typically send a stock soaring. CEO Hock Tan attributed the company's exceptional performance directly to the accelerating adoption of artificial intelligence. Broadcom reported a staggering 63% surge in AI-related revenue, reaching $5.2 billion for the quarter. This highlights the company's critical role in supplying the essential components that power the AI revolution. Breaking down the results by segment, the Semiconductor Solutions Unit, which serves major hyperscalers like Amazon and Microsoft, saw its revenue grow by an impressive 26% to $9.17 billion. The infrastructure software business, significantly bolstered by the recent integration of VMware, also showed strong growth, with revenue climbing 17% year-over-year to $6.79 billion. Looking ahead, Broadcom provided an optimistic outlook, projecting fiscal fourth-quarter revenue of approximately $17.4 billion, representing a 24% year-over-year increase. This forecast also comfortably exceeds the Street's expectations of $17.01 billion. The company anticipates its AI revenue to reach nearly $6.2 billion in Q4, extending its streak of consecutive quarterly growth in the AI semiconductor business to 11. Broadcom also maintained its adjusted EBITDA margin expectations at a healthy 67%, underscoring its operational efficiency. Despite these stellar results and a positive outlook, AVGO stock saw a downturn. This divergence between financial performance and market reaction can be attributed to several factors. It's possible that the market had already priced in much of this positive news, leading to a buy the rumor, sell the news scenario. Alternatively, investors might be focusing on forward-looking concerns, such as the long-term competitive landscape in AI, integration challenges with VMware, or broader macroeconomic uncertainties. Analyst ratings remain overwhelmingly positive, with a strong buy consensus from 29 recent ratings on TipRanks and an average price target suggesting a modest upside potential. However, the immediate market reaction underscores the complex and sometimes unpredictable nature of stock performance. The market's response to Broadcom's record earnings has sparked considerable discussion among investors and analysts. While the company's fundamentals appear exceptionally strong, the stock's performance highlights the nuanced factors that drive market sentiment, including investor expectations, sector rotation, and macroeconomic outlooks. The community is keenly observing how AVGO's stock will react in the coming days as the market digests the full implications of its earnings report. But Broadcom isn't the only player making significant strides in the AI arena. Let's shift our focus to another tech powerhouse that's not just keeping pace, but setting new records with its cutting-edge innovations. Broadcom hits new heights, record Q3 fueled by AI dominance. Broadcom, AVGO, has once again demonstrated its formidable presence in the semiconductor industry, reporting a record-breaking third quarter highlighted by explosive growth in its artificial intelligence accelerators and the successful integration of VMware. The company's latest financial results showcase a powerful combination of innovation and strategic execution, solidifying its position as a leader in high-demand technology sectors. The semiconductor giant announced its fiscal third-quarter revenue reached an impressive $15.95 billion, a substantial 22% increase compared to the same period last year. This figure not only represents a new quarterly record for Broadcom, but also surpassed analyst expectations, which were hovering around $15.83 billion. This strong top-line performance underscores the company's ability to capitalize on surging market demand. On the profitability side, Broadcom reported adjusted earnings per share of $1.69, marking a significant 36.3% rise from the previous year and exceeding the consensus estimate of $1.66 per share. These robust earnings reflect efficient operations and strong pricing power. CEO Hock Tan directly attributed the company's outstanding results to the rapidly increasing adoption of artificial intelligence technologies. Broadcom's AI-related revenue experienced a remarkable surge of 63%, reaching $5.2 billion in the third quarter alone. This significant growth highlights Broadcom's pivotal role in providing the essential hardware that powers the current AI boom. The company's semiconductor solutions segment, which supplies critical components to hyperscale cloud providers such as Amazon and Microsoft, performed exceptionally well, with revenue climbing 26% to $9.17 billion. Furthermore, the infrastructure software business, which now includes the recently acquired VMware, demonstrated strong momentum, generating $6.79 billion in revenue, a 17% year-over-year increase. This dual-engine growth strategy is proving highly effective. Looking ahead, Broadcom has provided an optimistic forecast for the fiscal fourth quarter, projecting revenue to reach approximately $17.4 billion. This represents a projected 24% year-over-year growth and comfortably exceeds current analyst expectations of $17.01 billion. The company anticipates its AI revenue to approach $6.2 billion in the fourth quarter, extending its impressive track record of consecutive quarterly growth in its AI semiconductor business to 11 quarters. Broadcom also reaffirmed its commitment to maintaining strong profitability, guiding for adjusted EBITDA margins to remain around 67%. On analyst platforms like TipRanks, Broadcom maintains a strong buy consensus rating, based on a significant number of recent buy recommendations and a few holds. The average analyst price target suggests a modest potential upside from its current trading price, though these estimates are subject to revision following the release of the latest earnings report. The market's reaction to these strong results, particularly the stock's performance despite record earnings, has been a topic of intense discussion, underscoring the complex factors that influence stock prices beyond immediate financial metrics. Investors are weighing the company's clear technological leadership and execution against broader market sentiment and potential future challenges. The overall sentiment surrounding Broadcom remains highly positive, with its strong financial performance and strategic positioning in the AI market being key drivers. The market is closely watching how the company continues to navigate the rapidly evolving tech landscape and capitalize on the ongoing AI revolution. Discussions are active regarding the long-term implications of its VMware acquisition and its sustained innovation in semiconductor technology. And that brings us to the end of another packed update. Don't go anywhere, we've got a quick recap and your essential call to action coming right up. And that brings us to the end of another packed update. Don't go anywhere, we've got a quick recap and your essential call to action coming right up.